All right. Well, thank you for joining us today as we kick off the first of an ongoing series that will focus on COVID-19 and its direct impact on the construction industry. Today, we will hear from Dan Pomfrett, Cummings' very own Vice President of Forecasting Analytics. His team has been following this pandemic since the very beginning, and they are in constant communication with our teams across all sectors and regions. This has been allowing Dan to keep a true pulse on the industry while helping us navigate these uncharted waters. Well, thank you, Dan. I know there's a lot going on in the world today, at work today. We're trying to figure it out as we go. Everything's changing by the hour. So thank you for joining us. We really appreciate it and hope you can provide a good update and hopefully maybe a path forward that you're seeing. So thank you.
Absolutely, no problem, and thanks for the introduction. Thanks to everyone who's watching this webinar and hearing about our views and what we're seeing in the construction industry and COVID-19. As you mentioned, Jess, things are changing on a daily basis, and so what we wanted to do as a first step was really just give a brief update, high-level update on the construction industry. What we wanted to do is look at the construction restrictions that we're seeing across the US, and so you'll see here from the slide that's shown on the screen. That each state is dealing with this really quite differently. There's 4 states there, which we believe soon to be 5. They're actually listing construction as non-essential. So in theory, most, if not all, the construction has stopped in those locations. And then we have 3 states that actually, on the flip side, have no restrictions whatsoever. So what's really interesting about this is that as we look back to the 2008 recession, is that a lot of the construction projects are actually still ongoing, and unlike that time, construction industry is still moving forward, labour is still staying in the market as well. So construction is looking to not be as badly impacted as it had been 10 or so years ago. We're taking 2 excerpts from New York City and San Francisco's the citywide order. But you'll see here that they do actually have still essential construction listed for things like roads, bridges, hospitals, healthcare, and in San Francisco's case, 10% for affordable housing as well. So, construction is still continuing, and what's very interesting about where we find ourselves today is that unlike the recession in 2008, construction is still continuing. It hasn't seen a wholesale stop as we did see 10 or so years ago. So one of the questions that we constantly get from our clients and owners is material pricing. And here we've listed out 6 of the key materials that we use across the US, and specifically in the construction industry as well. And you see that a lot of these are really driven by supply and demand. So as you take a look, for example, for oil, we're expected to see a massive drop in the demand for oil, but the supply is still going to be there. So you're going to see that over the course of the next few months, that prices are going to remain pretty low. Still has a similar case along with copper, in that there's currently an oversupply in worldwide, and particularly in the US as well. So we've seen prices there drop 10 to 15% over the last couple of months. Interestingly, steel is still cheaper actually in the US at the moment than abroad. So we're expecting the steel mills in the US to still be pretty active and pretty productive, but like I say, that oversupply is eventually going to drive down the prices. With sheet metal, this is probably going to be the ones where the lowest profit margins exist moving forward. We're expecting the cost to really drop down to somewhere around at cost levels. And then when we look at sand, gravel, stone, those prices are actually going to plateau. We're not going to see any increases, but we're not going to see any decreases. So when we start looking at the cost of comparison between steel and concrete buildings, for example, you're going to see a slightly different delta as we go over the next few months. And then glazing and gypsum, which are probably 2 of the biggest products that we use across the industry, they've had some great cost increases over the last 6 months, and we're expecting actually to see those reversed as we go into the next few months. But overall, we're expecting pricing for materials to pretty much plateau around about Q2 of this year, and then for the rest of the year remain pretty stable and steady before they start increasing in 2021. So moving on to labour, labour is by far the biggest driver in terms of cost for construction. Despite the materials plateauing and somewhat contracting over the next 6 months or so, labour actually on a year-by-year basis is expected to increase 3%, along with expected guidelines. And this is pretty much driven by the fact that there's a lack of skilled labour in the markets full still. That this has been a constant issue since the 2008 downturn. But ultimately this is going to lead to higher pricing as we go through the coming months, and a big driver of that will be the fact that whilst we have this slowdown currently, in 6 months or so, when there's this surge of work that comes back online, that labour is going to be quickly taken in and quickly utilised as well. So there's going to be that increase in costs that are driven by that.
Well, thank you for that, Dan. That was a really insightful market update. Hope everyone learned a lot. And as we jump into the next section, we are going to go over a few questions that were submitted by our team members and others in the industry. And I highly recommend that for our next webinar, feel free, for those that listen to this one, to send over questions. We're going to post this on our LinkedIn, our social pages, so feel free to put those questions in the comments. And we will pick another handful for our follow-up webinar. Without wasting too much more time, I'll jump into the first question. Dan, how will the construction industry be impacted over the next couple of years with COVID-19? How do you see that playing out?
Well, it's quite an interesting thing. I think many expect that the US is going to go into recession for the remainder of the year, and not just the US, probably the rest of the world as well. Construction obviously plays a key part of that. But as I mentioned before in the previous update, construction doesn't seem to have been as affected at the moment as it has been to the previous recession. So we're expecting the market to actually, whilst there's going to be this slowdown, there's actually going to be this surge of work coming to the market. So we actually expect the construction industry to be pretty active and pretty strong coming into 2021. A lot of the projects that we're seeing at the moment, for example, that are currently on site, they will look to more than likely finish that work and finish those projects. Projects that are being designed at the moment are still being designed. Architects, designers are still working. And some of those projects aren't going to be built for maybe 2 or 3 years, so those shouldn't be affected. But so overall, I think when you look at the industry, it's going to be pretty active from 2021 onwards. We're looking at it to be very, very positive. The only one caveat to that I would say is that in the short term, the projects that were just about to come to site, we're seeing a lot of those projects actually be pulled back or slow down whilst people find out what's happening with the market. And then also we see in some instances where lenders have actually pulled or slowed down lending on projects, and so that's also led to some projects slowing down or being put on hold indefinitely for the time being. But I mean, overall, in terms of looking over a few years or two, 3 years, the industry should actually be pretty strong for that period.
So we've talked about the strengths and what we see in that regard. The next question is that was submitted. What sectors are seeing the biggest impact?
Yeah, I mean, it's very varied across the whole industry. Obviously hospitality, gaming, even aviation and luxury residential have really been hit the hardest. Business travelers are not traveling, so hotels have seen reduced numbers of guests. Same for the aviation, with less people flying as well. And then gaming, those locations are being shut, for example, for probably one of the first types of buildings to be shut when the virus came in. But what we're seeing is that's actually taken away revenue stream as well. So once the casinos and once the gaming and the hotels start to slow down and shut, then that revenue source also goes away as well. When you look into things like logistics, we were our view is that we were sort of already moving to that sort of, online buying, purchasing, retail anyway. So we're not expecting to see, huge swathes of logistical centres and distribution centres, come up. But, that will still be a pretty active market. And, there's recent reports, for example, of Amazon trying to, employing 100,000 people during this time as well. So that's going to be quite a strong market moving forward. One of the more interesting ones moving forward will be commercial and particularly office spaces. Because there's been this trend over the last few years where a lot of people have gone to open plan offices, for example. Smaller footprints, smaller floor plates. Um, and now with the situation we're in now, are those designs going to change? Are we going to go to cellular offices, or are we going to go to floor plans where the open plan area is larger, so you get more distance in between people? And then also, we have, clients who have, large campuses, and, are they going to go for a single building now, or are they going to go for multiple buildings? So there's a lot of changes up there that could happen there. Some people feel that commercial and offices is going to sort of slow down quite dramatically, but we're pretty positive about that market and that sector, just because, there's going to be this change in design and change in approach, and once you add in working from home and all that kind of stuff as well, it's going to be some interesting times for that particular sector. And then finally, you had the government, libraries, museums, infrastructure, those kind of public funded projects. And typically, when countries go into recession, public spending goes up. So they're already pretty active markets at the moment, but again, we're expecting those to really sort of come to the forefront as we move forward. And of course, we had this huge $1 trillion package as well that's been set up by the government to help everyone through the period as well.
So the next submitted question, Dan asks, will we see a significant increase in material prices due to a short supply?
Well, as I mentioned in the slides previously, we're expecting material pricing to slow down and contract in many cases between sort of Q2 and then from Q2 onwards to the end of the year, expecting things to level out and stay pretty consistent and constant. The big thing that will drive this really is the demand. Interestingly, for example, China is now up to 85% and probably even more now in terms of capacity for production. So they're actually able to produce a lot of the products that are out there as well now. So we had the oversupply in the steel and the copper, but again, once that surge comes back of work, we're expecting to see prices not necessarily increase, but go back to where we would expect them to be. So I think certainly the slowdown now in pricing will be a benefit in the short term, but as we look longer term, that pricing will actually increase and then level out to where we expect it to be in the next sort of 12, 18 months or so.
All right, and one of the final questions here that we received asks, given that COVID-19 is a pandemic and not a financial problem like the 2008 crisis, is it possible that the construction market and the overall economy will fall back into place once the travel bans and restrictions are lifted?
Yeah, I mean, we're pretty positive about the economy moving forward. Like I say, in the short term, we will see this slow down. There are various conversations about whether this is a U-shaped recession or a V-shaped recession. We tend to think it's going to be the latter, a V-shape. So we're expecting, particularly for construction, that there will be a lot of work that comes out moving forward into probably the new year. But that said, there is enough work that is keeping people going up until the end of the year as well. In terms of, there's very few sites that are shutting. There's very few locations, like we saw on the previous slides, where construction is listed as non-essential. As I mentioned, designers are still designing, projects are still moving forward. So overall, when you look long term, the economy should be pretty well placed. What will be a key to this, I think, is how the hospitality, retail, restaurant, gaming industries bounce back, because they're going to get a longer ripple effect on this. And even as people start to travel for business again, how many firms are going to go back to the number of flights they were doing, how many flights are the airlines actually going to have on as well. That'll all come into play, and those are all pretty intermingled in terms of those sectors. So that will be probably one of the key areas that we will be looking at and focusing on, because as those sectors and industries come back, that's really going to start pushing things forward. And I said, government work in construction is expected to continue and push forward with the stimulus package. I think overall we're expecting, it may take a while. It's certainly not going to be in the next 6 months. But overall, the economy is, going to land back to where it was expected to land. I think that when you look at the current situation compared to the recession in 2008, it's not so it's less of a shock in some respects to the industries. And like I say, work is still carrying on. With the best will in the world, most people are still employed. There are obviously, like I say, in the entertainment industries and hospitality industries, that's a very different story. But hopefully, as we see this moving forward, the economy is going to bounce back to where it was, and we don't expect there to be as much of an aftershock or a ripple effect in general across the US or across the world when this pandemic is over.
And this next question, our final question for this webinar, is a question I think you've been asked a million times since this has started. It's about supply chains. Mm-hmm. If restrictions are kept in place for months to come, what impact will this have on the Asian and European supply chains? Could we see a rise in material prices? And would it be prudent to start looking at sourcing elsewhere?
Well, I think because of the tariffs, for example, that are obviously more recent in some respects. You'll see that a lot of people were looking around anyway, for supply and locations of supply as well. And so I don't think that's going to change. As I mentioned, China and the Asian markets are now starting to get their production lines up and running. Locations such as Spain and Italy, we're hearing today that they could be past the peak or certainly at the peak. So they may come online in the next sort of month or so as well. So as I mentioned, I think pricing will reduce in the short term, but overall, once we get into the new year, you'll find that pricing will start bouncing back again. One of the after effects that we will see is that as the industry comes back and the economy comes back, we're actually expected to see pretty high pricing and increases, for example, in air freight and delivery costs as well, because for example, are there going to be enough flights now that the industry has sort of slowed down there? So to fly those over and moving the containers across the ocean and things like that. That's really going to see a big increase in pricing, we expect. I mean, I think during the tariff situation, we saw price increases of 30% for actually freight and delivery. So whether they're going to be similar to that is anyone's guess at the moment. But yeah, we'll certainly be keeping an eye on that one.
Wonderful. Well, thank you so much again for taking time out of your day. Hope this was insightful and hope everyone learned a little bit of something new about what's going on and what you're tracking and what we're seeing with COVID-19. It's changing by the hour, as everyone says, because it is. Okay. So thank you, Dan. And again, if anyone has any questions they would like to submit, feel free to throw it in the comments and we'll pick a few for next time. Thank you.